right, welcome back to Health Further. Emily Evans, who heads up all things health policy at Hedgeye. Emily, welcome back.
Hey, thanks, guys. Glad to be here.
So we had to call you because for the last month, Vic and I have been way down the AI rabbit hole, and we know that there's been a lot of shifting and changing that's been happening in the MA space. It's really been very, very slowly and then all at once suddenly happening. And we've been talking about changes in demographics. We've been talking about the fact that the government can't continue to pay for these programs at the rate that they're paying for them. And we've seen a lot of shifting and movement over the last 45 days, I would say, probably mostly represented by the shifts that Cigna has made, or maybe most significantly by the shifts that Cigna has made with respect to HealthSpring and then a bid for Humana, which we now know has been called off. But it feels like a lot of scrambling that's going on in the MA world by the payers. And so wanted to bring you on to sort of have you frame up for us and for the audience what you are seeing broadly from a policy perspective, from a demographic perspective, and from a CMS shifting perspective with the newest physician fee rules that were just recently passed. And then anything else that you want to walk us through.
Okay, well, let's start with the regulation and the policy. CMS is kind of they're a little schizophrenic on this issue, is the best way to think about it. At least since 2010-ish, CMS has generally been, I'd say, biased towards the insurers. I mean, they need the insurers to be successful under the ACA and the exchanges and so forth. So there's not a ton of interest in antagonizing that group. At the same time, you have a very strong bias in favor of providers in Congress because they tend to; those are their constituents, the employers in their community. So you have this tension that persists and has persisted for over a decade between those two poles of influence. Now, in Congress, in particular, there's a fairly extreme group that does not believe Medicare Advantage should exist at all. They believe that is privatization. It needs to end. And they've been somewhat successful, tweaking the program, but the fact of the matter is a very popular program, and how are you going to really, matter that much? So with the pressure from progressives, you have seen CMS make some changes. For example, the direct contracting program, which began under the Trump administration, was modified and kind of morphed into an accountable care organization. You have the recent physicians fee schedule with some improvements to the Medicare shared savings program, specifically to encourage more uptake in rural communities, in communities that are generally underserved, which, by the way, communities Medicare Advantage doesn't have that much interest in. They really need urban or suburban environment to thrive. So they're trying to do that, and they are doing that. And there is an enormous amount of pressure coming from both left and right to make sure this program is paying accurately for care. There's a lot of questions about coding, legitimate questions, whether the MA plans are upcoding, or is it because as fee-for-service patients or uninsured patients, nobody was really reporting the diagnosis codes? We don't know. That research it would be helpful research if we could get it. But that's another kind of component. So that's the policy landscape, for lack of a better term. That's what it looks like.
That's the high level, maybe balance of interest groups and how the different policy and rule makers think about things. How do you see that impacting Medicare Advantage or other Medicare players today and then over the next couple of years?
Well, if you follow the history of regulation, usually it gets really onerous after the fact. when it doesn't matter as much as it did when the problem was first identified, that's when you see the regulation kind of ramping up. So, and that has to do with the fact that the stakeholders that are involved tend to recede from the battlefield. You've seen this in the pharmaceutical industry with various companies dropping out of pharma lobby group, dropping out of bio. They just don't, they're not engaged because it's not worth it to them.
In the emerging of something that needs to be regulated, big spending item like Medicare Advantage, the business groups, the interested parties that have money at stake are very engaged. And there are other groups that are trying to protect citizens that are also engaged, but they're sort of both helping to shape the regulation. And then as the market peaks and begins to get to be less of a big issue for the financial stakeholders, the business entities, they sort of recede to the background. And then the public interest is very highly regulated, but now the horse has left the barn a little bit, and it's sort of maybe not over, but it's declining. Is that what you're saying? Fair?
Yeah, that's generally how it works, and that's probably how it'll work here.
Yeah, and so we're going to get to the demographics in a couple of minutes, but I think the foreshadowing of that is we probably have hit peak Medicare, Medicaid enrollment, or we will soon, and so we're now beginning to see regulation come in. Is that fair?
Yeah, that's fair. And let's just take the Cigna Humana thing as an example. Cigna's decided they're not going to acquire Humana because buying back stock is much better for their stock price, which should tell you a lot, right?
Well, it either tells me that they are very near-term focused. It'll really help in the next 90 days. I don't know if it'll help in the next 9 years. It might tell us that even long-term, owning the second largest MA company is not something that shareholders want to do. I couldn't tell if they're really focused on near-term results, which most public companies are. It wouldn't be a crime, just is sort of how some things are decided. But I think it's worth it to talk through. Do you think it is not a long-term successful strategy to have a significant portion of your business in MA?
I think that it is a part of your strategy, because what you would always want to do is have a robust commercial book. And then as people age, because they're not going home like they used to at 65, they're staying employed, and you would migrate your commercial book into a Medicare Advantage plan. That would be a great strategy, especially since commercial is now growing again after years of doing mostly nothing. So, but as you become as seniors get scarcer, which is what's going to happen, you're going to see some consolidation. Every blue plan's got a Medicare Advantage plan.
Mm-hmm.
All the majors have Medicare Advantage plans, and the victory will go to the highly capitalized, efficiently run organizations. So I would say that you want that business. You should have that business. going forward. And you should take advantage of whatever consolidation there is, but it's got to be part of a balanced book, not just a standalone project. Which I think, in my view, Cigna probably is probably making a mistake here. But the street hated what it was doing, so they abandoned it.
Yeah, I mean, that's why I wanted to draw a distinction between time frames. I think Wall Street hated it in a 90 because they only think in 90 days increments, or even less than that.
Yeah, it was going to give you some 2 years worth of dilution that that Wall Street was not interested in.
Yeah. But Humana is one of the biggest players. They should benefit from consolidation over the next several years. Now we'll get to the demographics. It's not going to be a big growth market in the next multiple years, but Humana should do well in that space. Although they don't really have the next card to play. They're not strong enough in commercial, really. So I think for Humana, it's much better to join Cigna.
Right.
With Cigna, it's sort of, you have to take a longer term view.
Yeah. Let's shift to the demographics.
Not in Cigna's DNA, at least historically.
Yeah.
I think I think what you're going to see is, now that this merger's off the table, I think what you're going to see is acquisition of MA plans, particularly from the Blues guys.
You're saying you think we're going to see the Blues acquiring different MA plans?
Only if they're in a good capital position. I mean, some of these Blues are not in great shape. And it'll be the same with the commercial book and the Blues. The strongest will survive, like North Carolina, but Tennessee's probably going to get acquired.
Yeah, so I mean, I think that makes sense. So Elevance is probably the biggest Blue acquirer, but yes, North Carolina, maybe Highmark. There's several, Minnesota that are more traditionally strong.
Mm-hmm.
But Elevance seems like the 800-pound gorilla in the Blue market. That you agree with that? Or no.
Yeah, Elevance for sure. It's hard to buy a nonprofit, right? It's a big headache. But Elevance has already made a run for Blue Cross Blue Shield Louisiana. We should see more of that, I would think. But also, if you're a pretty strong plan sponsor, you can get members by just courting them, paying brokers, and Humana's been in a great position because they retain their star ratings, which brokers love. Brokers don't want to sell a product that's, going to have unhappy customers.
Yeah, so I want to get to the star ratings in a minute, but let's talk through the demographics. So that's kind of a key point that we have not discussed at enough length.
Yeah, so against the backdrop, that regulatory backdrop, I brought a couple of charts, Marcus. The first is, from the Census Bureau, it shows you that the population over 65 is not sustainable, and it's not growing like it was just a few years ago. And on the other side of this, and I circled on the chart, I circled it. This group of people, from the 2020 census who are aging into Medicare. Behind that is this pretty nasty little trough that goes on for 25 years, and that will accelerate consolidation as well, because it's a nice fight for members. You got to be really good at running an MA plan if you're gonna be successful. And if you look at the next slide I brought, this is a map of penetration. Your MA plans are heavily penetrated in urban areas, in some to the tune of 90%, which, by the way, just a few years ago was 75%. South Florida was 75% in 2019.
Let's go back to that last slide. Can you just orient me and maybe the listeners on the horizontal axis is age, the vertical axis is The number of
That's number in millions, number of people in millions.
Okay, yeah, number of people. And then I'd like to have you guess, I know it's in the future, but you have 2010 and 2020 circled. In 2030, that circle will be much lower. Is that right? There's not going to be that many people.
Yeah, in 2030, it'll follow the trajectory there. It's already evident. And that bulge will flatten out and it will drop.
Yeah, so just at a high level, we will not have 5 million people, but we'll lose 40% of that. It'd be at 3 million people.
Right.
Something like that. I mean, that's a rough number, but the market's going to contract in patient volume significantly. And patient volume is an important aspect in how much money is spent. It's not the only aspect. Acuity and other things are also in there.
That's right. And the kind of the sort of unexpected result of this is that Congress gets less concerned.
Right.
You know, it isn't the budget buster that it once was.
Yeah, and someone will play out, okay, over the next 20 years, the total cost of CMS is X, and let's just finance that and then move on to the real issues at hand. There'll be some date, 2030, 2028, 2032, where that argument starts to make sense. Let's take care of our seniors, but that's a declining total dollar amount, and we owe it to them. We should just finance that. And now let's focus on commercial or the younger demographics.
Yeah, it's possible. I actually think the most likely outcome here is probably going to be, just deregulating the system because it's what it badly needs. But yeah, you're right. Let's maintain this commitment to Medicare because it isn't even that big a commitment anymore. It's not like this is 2010, and you have more flexibility on other things.
Yeah. Okay. So then with that, it's certainly clear that it's more population dense in urban areas. What does that mean for the development of the market over the next 10 years?
So in in these urban areas, your demographics are going to do just what the previous chart suggested they should do. And those populations are going to decline, although the penetration of MA will probably still stay quite high. But the ability for MA to penetrate into those light blue sections of the US map is highly compromised by the lack of providers. So if you go to a county in Utah, for example, and say, hey, join our Medicare Advantage plan as a network provider, we'll pay you 82% of the Medicare fee-for-service rate. It's the only hospital within 50 miles. What do you think they're going to say? And in fact, they've been saying that.
Yeah. That's happening right now.
Yeah. So over the last 10 years or so, there's been two engines of growth. The eligible population has been growing, and the market share of Medicare Advantage has been increasing. And I think what you're showing us is that both of those engines of growth are slowing down or turning off. You can't get much more penetration in these urban areas, and then the available populace is going down.
Right. And one of the things that's accelerating this penetration, why South Florida has gone from 75 to almost 90 right now, is this change in law, which has, and I brought slide 7 to show this. This is changes to the Medicare Part D benefit. By 2025, plan sponsors are going to assume 60% of the liability for drug costs in the catastrophic phase. And you're in the catastrophic phase because you have high cost drug needs. You have a chronic condition. You have, you need specialty drugs, whatever the answer, cancer, for example. And with that additional liability comes additional need for visibility into the patient's needs. And if you look on the slide 6 that I brought, the Medicare Advantage PD is growing. Medicare Advantage is growing. Standalone PDP is dropping. So what you could see in those rural areas, most people won't have a standalone PDP plan available to them because nobody wants to offer it without people being in a Medicare Advantage plan, and nobody wants to be in network. So what happens?
There's no coverage.
Well, they'll be back on fee for service.
Yeah.
Medicare, right?
But they don't have a drug plan because you do fee for service and you pair that with drug plan. That's the answer right now. But what if there's no drug plan to offer? Because it's not worth it to the plan sponsors because they can't have visibility into your total health care.
Okay, so go to that pricing slide again.
This dynamic is pushing the penetration and the enrollment up fairly substantially right now.
So go back to this. So here, the PDP plan sponsor is responsible for a lot more of the cost. It's that 60% over the 2,000. Is that right? And if they don't,
yes, 60% over the 2,000 threshold.
And what you're saying is if they don't also have the sponsor in a Medicare Advantage plan, they can't really see the medical side. They only see the drug side. And that makes it very difficult to underwrite that risk.
Exactly. And I'll add Medicare Advantage plans, that's higher margin business than a PDP plan. And the difference is something like 8-9 versus 1-2%.
Okay, so that's going to make it more people will go into Medicare Advantage as long as there is the potential for that in their provider network. If they're not in rural America, if they're in rural America, there may not be that optionality.
Correct.
But the overall kind of macro dynamics are still declining, although it will push more people into Medicare Advantage.
That is correct. So you've got lots of puts and takes. You've got the demographics, so it's a knife fight for members. You've got, people wanting to switch into Medicare Advantage. So you have this short-term advantage tailwind there for new members, and Humana is definitely demonstrating that. And then the game that will be played here in the short end is growing that membership as much as you possibly can, then moving on to consolidation and becoming, a significant market player, which is of course going to irritate Congress, as I mentioned earlier, but that's got to be your strategy here.
Okay, so in that environment, CMS is also changing the star rating system, and it's pretty complicated, but it seems to me like they're bringing more carrots and sticks to get Medicare Advantage plans to be more engage with consumers, driving better behaviors, and they're sort of tying reimbursement to performance. Is
correct,
that close to right? So I think you might have brought something about stars rating. Is that right or no?
Yeah, if, it's slide 12 on the most recent deck I sent. And what you can see is that the and just by way of context, you want your plan to be 3.5 stars or higher.
Okay.
Because then you get the bonus. You really want it to be 4 stars or higher. But if you're 3.5 or below 3.5, you're not a very good plan. You don't get it's like, why are you even in this business? But if you look at slide 12, you can see that because of these changes to the star ratings, you have seen a significant decline since 2022, so 22 year, in 5-star plans. So that's where you get your best bonuses, highest customer satisfaction, et cetera. In your 4.5-star plans, you've seen in some 4 and 4.5, you've seen some declines there, and your 3-star, 2.5, those have increased as well in the last couple of years as a result of these policy changes.
Yeah, so we have a bunch of people that are listening and not watching. So just to describe it, it's pretty flat in the star ratings from 2017 to 2021 or so.
Yeah.
There's a little bit of growth.
You don't see much shifting around there.
That's right.
There's growth in the new plans, which you'd expect as the program came online. And as we said, these 2 growth engines were there. But then after that, the rating system, they haven't decreased their performance. The rating system has gotten progressively more challenging. And then the scores, as represented by star rating, have declined. It's very difficult to be a 5-star. That's been declining since 2022. But all the star ratings, you've been moving lower. It's like if I have kids in school, the school started applying a much harder grading scale than it was previously.
Yeah, and they have a variety of mechanisms for doing that, but that's exactly the way to describe it.
Well, but there's also, somewhat similar, although off by a year, to some of the swings we saw in the market. 2022, it's kind of retrospective, right? Looking at what happened in 2021. The 2022 is actually a huge jump in the number of 5-star plans, and actually a decrease in the number of 3 and 2.5-star plans. And then, you kind of have the pendulum swinging pretty aggressively in 2023, where it's about half the plans are below 3.5, or 3.5 stars or below.
Yeah, and what happened there, Marcus, is you had some pandemic related relaxation.
Yep.
That informed the 22 numbers.
Yep, that's what I would have figured. Yeah, so now we have the pendulum swinging to the other side, kind of cleaning up the pandemic hangover. And significant growth. The decrease in the 5 stars to me is not as apparent in this graph as the growth of 2.5 and 3-star plans, which, as you said, that's just not viable, right?
No. Brokers might give you a year or two, because these plans are very sticky, but customer satisfaction hits the broker first.
Yeah. Are there any names in particular out there that really kind of dominated the decrease in stars that we can?
Well, Elevance had some real scrutiny because they did not perform well at all in their star ratings, and they fell out significant. I don't have the numbers here, but a significant number of their plan membership fell out of 3.5 stars and above. So they were a weak performer. Humana is knocking the cover off the ball, though. UNH also lost some of its dominance, although nothing like Elevance. And I've not examined all the Blues plans and some of the smaller players.
Yeah, I think that's right. And so there's a lot of pressures on the Medicare Advantage market over the next couple of years. I think it will drive consolidation, as you said. I'm seeing in my portfolio, we have small often innovative products in our startup companies, and they're starting to get outbound kind of or inbound requests from payers because they want to engage with customers. They want their customers, the subscribers, to be happier. There's a bunch of things in the star ratings that kind of aligns with making the subscriber satisfied or delivering better care, however CMS wants to measure that. And I think there's an opportunity for innovative companies to partner with large plans if you can deliver better star ratings.
Right. And let's also acknowledge that the changes to the Medicare Shared Savings Program and an effort to expand or encourage development of the accountable care organizations also represents an opportunity. I did not bring this chart because the data work was ridiculous, from a government data set, but the growth of the ACOs or participation in the ACOs and the MSSP program has plateaued. It took off pretty big, post ACA, grew nicely, and then kind of flatlined, especially over the confusion in the direct contracting program. And really, what CMS wants to see is renewed growth in that, because it's probably the most viable approach in a rural, ex-urban, Indian health service, those types of areas of this country. Whereas Medicare Advantage is just not.
Yeah, and are we seeing, just to kind of go downstream a little bit from the payers, as you were talking about some of the the dynamics that make Medicare Advantage just not viable for providers to accept, are we seeing more providers sort of shifting their focus to MSSP and ACO models proactively just because they believe it's more viable for them?
I haven't seen too much data on it, but what I can tell you is that providers' willingness to accept risk in the MA program has flatlined. Now, one of the advantages of ACOs is you can choose one-sided risk that that is less dangerous than what the MA plans might ask for. They might ask for two-sided risk, and that's not viable. So slide 11, which I brought, is enrollment of Medicare Advantage PPOs versus HMOs. HMO, of course, would be where the provider takes the risk. PPO is more based on the prevailing rate. And you can see the PPO enrollment has grown. And I've been using that as a proxy for provider interest. And you can see, for example, Marcus, the Vanderbilt dropped Medicare Advantage HMO in April of this year,
Right.
and I think that's the first order effect of any rate disputes. Okay, I don't like your rate, and I'm not going to take any risks. I'm dropping the HMO. It's a kind of a first order and fairly easy response. And I'm using enrollment in those different groups as a proxy for provider interest, since it's hard to really gauge provider interest otherwise.
Yeah, we definitely have been seeing providers dropping off of MA as sort of a first tactic in rate negotiations, and it does seem like the payers are coming back to the table as that's happening, but definitely a lot of pressure there.
Yeah, and I think it's gonna kind of continue throughout 2024. I brought slide 9, which shows the employment cost index versus labor demand. Labor demand in healthcare is still pretty high. Looking at the jobs data from last week, and it's still inducing people into the healthcare industry. Costs more money now than before. The only costs that matter in healthcare is labor, and so it's staying elevated. And I think you're going to see you're going to have to either see premium changes, which we know we're going to see, or you're going to see more pressure on the providers, and they're going to behave accordingly. I'm not going to do that. I'm not going to take your HMO. I'm not going to take risk. Those kinds of things.
Yeah. So again, for people that are just listening, the two lines on here, the gray line is the year-over-year change of employment costs, how much it costs to hire workers for providers. Is that right?
Right.
And the blue line is the demand for labor. And the demand swings around based on the ACA, and then during the pandemic, they needed to hire lots of people, I guess. Is that right? And then the cost, although it has come down from the peak, is still higher than is probably healthy for the industry, without changes to reimbursement, which is sort of what you're suggesting. Is that right?
Yeah, and what I'm suggesting with this chart is that those changes are coming. We're seeing Medicare updates, improve in response to the labor costs being baked into their models, which is slower than anybody would like. And at the same time, you have, Medicare Advantage plans just trying to resist those additional costs and having these difficult discussions, between providers, which are in many cases ending up with people leaving at least the HMO, but also leaving, plans altogether.
So, Emily, just to kind of put a bow on this, because thank you. This has been a great review of sort of how we got to where we are today. Any general guiding thoughts around what you expect to see in Medicare Advantage throughout 2024, and maybe next time we sit down and convene and sort of take a review of the year next year this time? Obviously, there's not going to be a ton of shifting in the demographics, so that trend will continue. But anything else that you expect to sort of be a factor by the time the next physician fee rule gets dropped next year?
I would say that 2024 will be marked by increased tension between the insurers and the providers. And one of the dynamics here, as we mentioned, the consolidation piece of this, if consolidation is inevitable, and let's say you're going to consolidate simply by acquiring members, your job one is to keep your premiums as low as possible. And remember, the environment for Medicare Advantage is frequently zero premium, which is not what it was meant to do, but it's zero premium. So when you go from $0 to $30, does that matter? I bet it does. And that's that's your pressure point. Can you get more members and steal them from the blues plans or a weaker 3-star plan? Well, you're going to have to keep those premiums down. Can you do that? Or you're going to have to get customer satisfaction up, or maybe you do a combination of both of those things.
Yeah, so weak hands get shaken out. Larger players that are more, in a better capital position can probably play offense and grow the book pretty aggressively over the next couple of years. And then continued pressure between payers and providers. I mean, I think those themes are all themes
and that's what I was seeing around innovation. I mean, if you have to keep your cost to deliver care, which flows into the premiums, low, but you also need people to give you good ratings because that feeds into the star rating. So doing something that is lower cost to you and makes the subscribers happy is really good. Now, whether an innovative company can deliver that or not is a question, but that's we should see that grow, which probably is healthy. I mean, if CMS can get that to occur, that's a good thing, and I think for everyone in general.
Yeah, well, the setup here is a scarcity of resources, right? And a scarcity of resources is a prerequisite for innovation. And we haven't had a scarcity of resources for 20 years in healthcare.
Yeah.
Awesome. All right, Emily, we'll probably be talking to you in about a month. I mean, we're going to start doing quarterly stuff with you, so we will circle back. But until then, thank you for everything you do for us all the time, and have a very happy holiday.
Okay, you too. Great being here.